I suppose my screen is visible.
Yes. जनगणमन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगल दायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Thank you. Now, before we begin this session, I would like to request our principal, ma'am, Dr. Lona Mukhopadhyay, to kindly say a few words. Ma'am, over to you.
Thank you, Jasmine. Hello, everybody. Good evening to all. I welcome you all in today's webinar entitled Financial Literacy and Planning. Am I audible, Jasmine? শোনা যাচ্ছে
Yes,
তো?
ma'am. Yes, ma'am.
আচ্ছা। Welcome to the Financial Literacy and Planning webinar. Today's workshop cum webinar, and today's coordinator is SEBI, that is Security Exchange Board of India, and this is also our college NSS unit. We have 2 NSS units in our college. This is also their program, so they are the co-organizer of this SEBI program. So I welcome today's speaker, Dr. Sudipta Ghosh, and also I welcome our NSS program coordinators, Tulima De and Sudipa Pramanik. My best wishes to Jasmine Singh, Dr. Jasmine Singh, who is anchoring the program, and I welcome you all the participants present here, all teachers and students. With their presence, this webinar will be a great success. I hope so. Financial literacy and planning are crucial for all of us, especially the younger generation, that is our college students. This is very important in case of students' future, because they should have financial knowledge or their financial safety in future, and this type of workshop helps our students money and proper planning of final and financial planning, and they should teach the students and their future generation so that they save their financial planning properly. So I wish a great success of this webinar, and my puja greetings to you all, and thank you. Over to Jasmine.
Thank you, ma'am, for your kind words. I think we would now like to invite our speaker for today. May I invite Dr. Sudipta Ghosh, the SEBI resource person, to kindly take over. Sir, are you there online?
Okay. Good evening.
Good evening. Sir.
I am Dr. Sudipta Ghosh, SEBI resource person, Security and Exchange Board of India resource person. Thank you to each and every one of you for being here with us in today's financial workshop. And I'm delighted to be here with you, and also grateful to Principal Madam and Dr. Tulima Bey for their cooperation and support for the financial workshop is concerned. In the recent past, I have been able to conduct so many workshops for the northeastern states. Almost all the states has been covered. Right now I am conducting workshops for the Manipur, and there was an overwhelming response in that states. Almost I have been able to conduct more than 35 workshops, and I am representing for NCFE, National Center for Financial Education, Mumbai, and I'm working here in West Bengal as a SEBI resource person, Securities and Exchange Board of India resource person for the last 5 years. And I am hopeful that as per Government of India guidelines, we do require minimum 50 number of participants in a workshop. So I request all of you to help others to join this workshop. This workshop is meant for everyone, because financial workshop, as we know, that everyone assumes to be here to learn the ABCs of finance. Financial literacy assumes much significance in today's world, and financial literacy as a life skill is to be imparted to every individual for management of their personal finances. And people face various issues like complexity of financial products, prevalence of fraudulent and Ponzi schemes, need for funds to get better quality of life after retirement. And these issues have generated need for a better management of personal finances with proper management of income and expenditure. So as we think that financial education helps people in being financially literate and develop a positive attitude towards managing their income, expenditure, assets and liabilities properly, which would lead to better financial well-being. So I request all of you to be here with us in this session, and everyone is requested to be here with me in this session, and don't get perplexed or confused. You may ask questions regarding the presentation is concerned. I'm trying to explain the ABCs of financial literacy, and please be with us and help others to join these workshops, as we need 50 number of participants. As a minimum number of participants is considered for the workshop as per Government of India rules and regulation is concerned. So let us start with the presentation part. I hope everyone can see the presentation.
Yes, sir.
Okay, thank you. So I'm having so many slides. I used to cover so many slides during this presentations part. I don't know how many slides I will be able to cover in this presentation, in this session. So please be with me. I am trying to give you the insights of financial literacy. And in this session, we will learn about the first section, first presentation. We will learn about identity theft protection, use your credit card responsibly, student loan borrowing principles, avoid impulse buying, let us go cashless at your first paycheck. Afterwards, we will learn about SIP, systematic investment plan, mutual funds, national pension system, and many others. So, in identity theft protection, there is a misconception that identity theft only happens to people with money. But the truth is, you don't have to have money to be a victim. So anybody can be cheated, anybody can be duped. It is not that you are having enough money, only you will be duped. It is not that. So anybody can be cheated or anybody can be duped. How it occurs? Let us try to understand how we can be cheated and what are the ways and what are the ways you can be duped. So how it occurs? It occurs through phishing emails, lottery and job scams. What is that phishing emails? Phishing emails where an attacker sends a fraudulent message designed to trick a human victim. They will write like, "Dear valued customer" or "Dear customer." They will ask for banking details to regularize your account. And whenever you give your details and your data, then you can be cheated at any point of time. So don't open any email from undisclosed person. So it can steal your data, credentials, credit card, numbers and many others. So how it occurs? It occurs through lottery. They will offer you lottery. You will receive an email notification from an unexpected person that you won huge prize, a huge amount of money. You send your personal details like your name, your address and your whereabouts. And whenever you submit your data, your personal data, then one fine morning you can see that your bank account has been hacked. So be aware about the lottery or the prizes offer comes through email or SMS. Job scams. What are job scams? Some organization will offer you jobs that they will ask for registration fees, and after that you will have to deposit money and then you will be offered a job. So these are the ways by which you can be cheated. So please be aware about these ways and you can take care of it. Download malware onto computers or smartphones that needs information. What is that malware? Malware is a software that is specifically designed to disrupt or damage or gain unauthorized access to computer system. So don't download any malware into your computers or smartphones that may steal your information. Connect to wireless networks that are insecure. Please avoid transacting money in a Wi-Fi zone like railway Wi-Fi zone or airport Wi-Fi zone. It can happen through online shopping. You will get SMS or email for buying product at great discount. You go for order and log in with details and send money, but the products never shipped. It can happen through discount coupon SMS. that 90% discount will be given, and you log in the website and give your personal details. So these are the ways you can be cheated. So be aware about it. So take out money from an ATM that has been rigged with a skimming device. Share passwords with untrustworthy people. So don't share your OTP over phone or email or SMS. Don't share your ATM passwords. Don't open any malware or any link. Don't share your personal details or bank details. And information stolen from e-commerce and other sites you frequently visit. Credit card, what is that card? And everyone are having debits and credit cards. Those who are working, definitely there are two types of cards are in practice. One is the credit card, another one is the debit card. What is a credit card? Credit card gives a card holder the benefit of availing certain period of credit, that is, making payment without having immediate money on hand in credit card transactions. So, having credit card, definitely you are having some kinds of advantages. What are the kind of advantages? Let us see. If you don't know how to use credit card responsibly, it can be dangerous. Means if you are not going to use the credit cards in a responsible manner, then definitely you will be in problem. That is, you are inviting problem. So, but if you are smart about credit cards, they can help you improve your credit score. You can earn reward points, you can manage your short-term borrowings, and can avoid the need of carrying cash. So your credit score means the credit score, whenever you are borrowing money or you're purchasing from shopping malls, you are about to repay that money to your bank. That is also in a stipulated time. There's a fixed time. Within that time period, you'll have to return the money. If you are not repaying the money in time, then definitely the bank will charge you a hefty amount. And if you are repaying in time, then you develop a score. What is that score? That is the credit score, which is also known as CIBIL score, Credit Information Bureau of India Limited, a company who prepares the score, collecting the informations and data from your bank. They prepare the score, and the score starts from 300 and ends at 900. If your score is more than 800, then you are being eligible to get more loans from the banks. So, CIBIL score, that is the score which can help you to get more loans or better loans opportunities from the banks. You can earn reward points, as well as you can earn reward points by which you can purchase from the shopping malls or from the e-commerce sites like Amazon, Flipkart and others. You can manage your short-term borrowings and avoid the need of carrying cash. So if you are not utilizing the credit card responsibly, then definitely the bank will charge hefty amount, that is a penalty for your borrowings, and that may go up to more than 18% per annum. Educational loans. Those who are studying in college, having in mind that they will go for further studies, means higher studies, and higher studies, everyone having in mind that they will complete some higher studies after completing the bachelor's degree. So going for masters or going for professional courses, it's not that easy because you'll have to deposit some fees. If you're not entitled to get a scholarship, you are not eligible to. If you are eligible, then you'll have to deposit the admission fees. And in that case, if you are not having finance, then definitely you go for financing your education part. And that's why you are going for educational loan. What is that educational loan? Educational loans that you can borrow from the banks. You can borrow from the banks, and in this case, you will have to understand the interest rates of the educational loan. Understanding the interest payment on loan and interest rate fluctuations in the future is the essential part before taking the educational loans. So educational loan preferably given within the age bracket of 18 to 35 years, and during the loan application undergoing a graduate, postgraduate or a postgraduate diploma, applicants should have secured admission in a college or university affiliated by University Grants Commission, All India Council for Technical Education, or by the government. Here the co-applicant is a must. It can be parents, spouse or siblings, and the loans between rupees 4 to rupees 7.5 lakhs third party guarantor is required. And for loans above rupees 7.5 lakhs, collateral required. Here the security required is the tangible collateral or the guarantor. As we know that State Bank of India also offers educational loans. So we will try to understand the interest rates on it and what are the cost benefit analysis of the educational loan. So the potential cost involved in the educational loans are interest payment on loan, number 1. Banks may have prepayment penalty charges, number 2, and number 3, potential fluctuations in future interest rates. These are the potential costs involved in an educational loan. And whenever we are talking about the potential benefits we are talking about, interest paid is eligible for tax deduction under Section 80E, potential earning from investments, and potential fluctuations in future interest rates. Here in a State Bank of India educational loans, where the interest rate is not fixed but floating. And the floating means variable. It means that the rate of interest is subject to revision every quarter. And floating rate loan, there are chances that the interest rate could decrease or increase. So before taking an educational loan, you must visit a site, the web portal www.vidyalakshmi.co.in. It's a portal where you can register yourself, and after registering here in this portal, you will be able to know what are the different educational loan schemes are available from the banks. You can also apply educational loans with a common form available in the site, and if you are eligible for the loans, then the bank will send you information to contact your nearest branch. So educational loans, we are having the floating rate of interest, means variable rate of interest, that the rate of interest is subject to revision every quarter. And floating rate loan, there are chances that the interest rate could decrease or increase. Now we come to avoid impulse buying. What is that impulse buying? Impulse buying means you are not prepared but still you go for buying. That is, the unplanned decision in buying is known as impulse buying. So what are the causes of impulse buying and how to avoid that impulse buying? It is very important for us to understand it. So why we buy impulsively? We buy impulsively because we think shopping is fun and we think buying is an act of empowerment and we derive pleasure from it. That's why we buy. We buy because we don't want to miss out on the limited period offer. So some sale is going on and you don't want to lose that opportunity. Therefore, you go for buying. So why we buy impulsively? We buy impulsively because it is very difficult to resist the idea that we will save if we buy now. That is the desire to save. If a sale is going on and if you are going to have a look about the sale, then you can see that you can save up to 75% of the original prices. What does it mean? That if you buy now, you can save money. That is the desire to save. We buy impulsively because we think we are better than average. We believe we are better than average in looks, in driving, in parenting, and others. So before you buy, you ask questions to yourself. If you think if it is urgent and important, then buy now. If you think it is not urgent and important, plan to buy later. If you think it is urgent and not important, buy if you can afford. And if you think it is not urgent and not important, then do not buy. And it will help you to save money. And accordingly, you can go for investment, your financial planning part. That's very important for your life. So let us go cashless. In this section, we will learn about the various mode of transactions, financial transactions, how we can transfer money and receive money, and what are the various methods or way out by which we can send and receive money. So we can send and receive money through internet banking, mobile banking, debit and credit cards, mobile wallets, other enabled payment systems, unified payment interface, unstructured supplementary service data, Bharat interface for money. So these are the ways by which you can receive and send money. So let us first discuss about the internet banking. What is that internet banking is concerned about? It is concerned about NEFT, National Electronic Fund Transfer. NEFT, which is the online funds transfer introduced by Reserve Bank of India. NEFT, that is the National Electronic Fund Transfer, and the transfer of funds from one bank account to different account of another bank using beneficiary's account number and IFSC code, that is the Indian Financial Services Code, a unique code assigned to each bank branch. You can send money and receive money through NEFT. RTGS, that is the real-time gross settlement. What is that? You can send money as well as receive money. Here the PAN is mandatory. In RTGS, PAN is mandatory. Permanent account number is mandatory. And the minimum amount required for transfer is 2 lakhs rupees. Here also, transfer of funds from one bank account to different account of another bank on a real-time basis, facilitating high-value transactions using beneficiary's account number and IFSC code. RTGS is faster and RTGS costs more than NEFT transactions. Likewise, we are having electronic clearing system and then IMPS, immediate payment service. Immediate payment service is a transfer of funds from one bank account to another, facilitating instant fund transfer. And for this case, for fund transfer through internet banking, beneficiary's account number and IFSC code are needed, and through mobile banking, beneficiary's MMID, that is the mobile money identifier, is a 7-digit number issued by bank to the customer, is also needed. So these are the ways by which we can send and receive money through internet banking. Right now, we will discuss about mobile banking. Mobile wallets. Mobile wallets. I think everyone having the knowledge about mobile wallets. It is through mobile devices you can send and receive money. Like Apple Pay, Google Pay, Samsung Pay, PayPal, Venmo. These are the mobile wallets available. It is also safe and the data is encrypted. Here the mobile wallet is an electronic prepaid payment system. You need a bank account and smartphone with internet facility. You can download and install the app. You can load money using net banking or credit or debit cards. The consumer wallet limit is 20,000 for all and 1 lakh for full KYC. You can use for making payments, and additionally you can receive and send money. This is all about mobile wallets. Other Pay is the other enabled payment system, which is a bank-led model, allows online interoperable financial inclusion transaction at point of sales, that is the micro ATM. Here Aadhaar should be linked with the bank account, and the transaction happen through Bank Mitra at point of sales, that is the micro ATMs. And the transactions can happen without PIN or the passwords. You can transfer funds other to other, you can inquire the balance, you can deposit cash and withdraw money. You can pay at shops, and the transaction cost is zero for the consumers. How you can register yourself in the UPI? UPI. So what is the UPI? Yeah, the transactions to be done through any smartphone using virtual payment address, facilitating 24/7 transfer on a real-time basis. So one needs to download UPI-enabled bank app and logging using bank details. So let us try to understand it. First, download any bank's app or any third-party app. After that, you choose your unique ID, Aadhaar or mobile number as virtual payment address. Then select your bank and then give your bank account details for the first time, and then set your MPIN for validating transactions. And afterwards, the registration is completed. Your first paycheck. So what is your life goals? It is very important, no? Everybody having in mind or having have a dream in life, and the goals vary over the time. When you are a student, that is when you are a school student, you are having in mind that I will buy a bicycle or a motorbike within 2 years of time or 3 years of time. Whenever you join some college, you are having in mind that I will purchase a laptop of my own, or having in mind or having goals to go for higher studies. So goals varies over time, as well as goals is different for different persons or people is concerned. So goals are, let us try to understand what are the kinds of goals we are having. You can pay off your student loan, starting your own business after completion of your studies, buying a car, your dream house, going on a vacation, your marriage, starting a family, retirement planning. These are the life goals. So goal, what is that goal? Goals can be classified in different aspects, like basic financial goals, like food, clothing, shelter, secondary or advanced financial goals, education, house, marriage, and retirement planning. So your financial goals can range from acquiring assets, saving for emergency, as well as investment for your future financial security. So depending upon your goal, you can plan accordingly to achieve that goals. So individuals can use a variety of investment, risk management, and tax planning strategies to meet their financial goals. So these goals change over an individual's lifetime, and accordingly the financial plan should be reviewed on a regular basis for any modifications as per change in circumstances. So what is my suggestion is, while making financial plans, one should first ensure a planned savings amount and then plan for meeting expenses. What we do in practice, we first spend, then save money. But what should be done? What is important that you save first, then go for the expenses. The wealth is not built overnight, and one need to set specific financial goals. Goals must be SMART, means specific, measurable, achievable, realistic, and time bound. Otherwise, you will not be able to reach your goals. So, you first identify your goals, then classify your goals into short term, medium term, and long term. What is the short term goals? Short term goals are generally financial requirements that are expected to arise in time period ranging from few months to 1 year. Goals like buying property, starting your own venture, or getting enrolled in a professional course can be a medium-term financial goal. And what are the long-term goals? Long-term goals may have a time horizon of 8 years or more, like child's marriage, retirement planning. These are the goals which takes more years. After that, what you do, the asset allocation strategy. Asset allocation strategy, what does it mean? Asset allocation is a strategy for investing your money into various asset classes. That means whether you go for investment in equity, mutual funds, and depending upon your risk appetite, you go for your investment. If you think you will be able to invest in recurring deposit and fixed deposit, then go for invest in recurring and fixed deposit. If you think I can take little bit of risks and I want more return on investment, then go for mutual funds. If you think I'm young enough and having in mind to go for more risks, then you can go for equities, that is the share markets. And these are having different areas. It is not the share markets is one word. You can go for different areas where you can invest through share markets and mutual funds. So depending upon your allocation, asset allocation, you can do your financial planning, as well as you'll have to review your financial planning periodically so that you can reach your goals. So in this slide, I will just discuss in short or in brief that savings account, which is considered as an emergency account, and you can set aside a little bit of money every month, and you should cover at least 3 to 6 months of your expenses. And savings account, really it's where you get a little interest rates, which is being calculated on the principal amount, that is the simple rate of interest, and which is as low as 2.70% per annum. So you are putting your money, that is 100 rupees a year, and you are getting only 2 rupees 70 paisa after 1 year time, which is you cannot beat inflation. If you are saving, you are putting your money in savings account, you cannot beat the inflation, as well as you cannot overcome the inflation part. So putting your money, all your money in savings account is not at all wise. So you can put aside, or you can decide different assets for your investment parts. What is the savings? You know that savings is equals to, or savings means your income minus expenses. And what is that investment part? Investment is by which you can reach your goals. Investment is an act of deployment of money out of savings into financial or non-financial products with the expectation of earning higher returns over a period of time. That is the investments. So two words, two different meaning. Investments and savings are two different meaning. So try to invest, not savings in your savings account. EPF, Employees Provident Fund, as you are aware about it, whenever you join a job, your employer opens a EPF account in favor of you, and EPF enables you to enjoy your retirement part. And here, the 12% of your salary and a matching contribution from your employer you get. And the corpus fund, usually you get after the retirement. That whenever you attain the age of 60, you will get the corpus fund. And PPF account, Public Provident Fund account, there is no age bar. You can subscribe this account in any bank, nationalized bank, or any post office. The minimum amount required for investment in PPF account is 500 rupees, and maximum you can invest 1.5 lakhs rupees a year. Here the interest rate usually you get, that is more than that of the recurring deposit interest rates, and fixed deposit interest rates are being offered by the banks. And the interest rate you are getting is compound rate of interest, which is also considered as the eighth wonder of the world. Eighth wonder of the world. If you sleep, even your money will grow. So PPF account is a very good account for long-term investment, and it is of 15 years duration. And you can withdraw money of your 50% of your savings account, of your savings part, from the PPF account after 5 years time. So PPF is a very good investment. Who are not having a risk prone, you want to with the lower side of risk, and you don't want to take any risks, and it is assured, and PPF account, the money is assured and guaranteed. Life and health insurance. Insurance which is considered as a risk management tool. And don't expect monetary returns and buy the wrong policy. So your age is a major factor in calculation of premium, so buy it early. And carefully consider all options before buying, and buying this insurance has some tax benefits also. national pension system, which is also a product of Government of India. NPS is also market linked, and NPS is also market linked, and any one can enroll into this NPS national pension system. I will discuss in details, that is the tier 1 part and the tier 2 part afterwards. You please be with me. Mutual funds. What is that mutual funds? Mutual funds, that is a convenient way through which we can invest in most type of assets. And what are the assets? Asset means the stocks, that is equities, bonds, short-term money market instruments, other securities or assets, or some combination of these investments. So it is through the mutual funds you can invest in different types of assets. You are not directly investing into the equities, you are investing your money in through via mutual fund company, that is the asset management company. In mutual funds, it is professionally managed through fund managers with proven expertise in the field of investments. And here you can see the diversification, which is an investing strategy that can be neatly summed up as investing small amounts of your money in different investment options, like different schemes of mutual funds and holding shares of multiple companies. So mutual funds, where you can invest in equity schemes, in debt schemes, hybrid schemes, solution oriented schemes, and other schemes, where the minimum amount required for investing in mutual fund, that is through SIP, that is systematic investment plan, is 500 rupees per month. So I will discuss in details about the SIP in the second presentation part. So whether you will reach your life goals will be determined by how much you earn. That is, you will have to assess your income. What is your present income? Income may be classified into active income and as well as passive income. So depending upon your income, you can plan accordingly. But how you spend, that is also important. You sum up all the expenses and you can see what are the kinds of expenses you are having, and also you can bring down the expenses part if you can plan every month's budget. And also how you save. If you can save, then you can go for investment. So where to invest, it is most important part. If you want to reach your goals, or if you want to achieve your goals, or if you want to materialize your dreams, then definitely you'll have to choose certain asset classes for investment. Asset classes, again I'm saying, what is that? Asset classes means if you can take the risks, then you can go for equities. If you can take moderate risks, then go for mutual funds. If you are not able to take any risks, then go for recurring deposits, fixed deposits, golds. These are the areas where you can invest. Financial literacy. It helps to create knowledge, skills and attitudes, and it enables best effective management of personal finance and also it aims to achieve financial well-being. It creates knowledge, skills, attitude and behavior to all so as to make best use of the personal finance to achieve financial well-being. So in short, what by which we can define financial planning? Financial planning is a process of meeting one's life goals through proper management of personal finance. So how you can manage personal finance? You can manage personal finance by going through these items, that is income, expenses, assets, liabilities, insurance, taxation, estate. Why do we need financial planning? We do need financial planning because of longer lifespan and lack of social security. We do need financial planning because of proliferation of numerous products. We do need financial planning because of the complexity of the products and services and increasing income and savings level. We do need financial planning because of increasing level of borrowings and higher aspiration and goals. And the most important part, that is the inflation. And to beat inflation, definitely we do need, everyone needs financial planning. And without the financial planning, you will not be able to beat or to overcome the inflation. What is that inflation? Inflation is price rise of goods and services. Let us take some examples. If we consider the price of petrol in the year of 2000, it was 26 rupees per liter, while at 2021 the price of petrol crossed 100 rupees mark. Is there any change in quantity or quality of the petrol? No change in quantity or quality. If you again see the price of gold in the year of 2000, it was 4,400 rupees per 10 grams, and in the year of 2021 it crossed 45,000 rupees per 10 grams. So is there any change in quantity or quality? No change in quantity or quality. So you can see the difference in price with the period. What are the causes of inflation? Causes means what, how the price actually happens. The demand supply gap, it is due to demand supply gap, it is due to decline of purchasing power and increases in production costs such as raw materials and wages. So inflation varies, means over the years, as well as inflation is not same for the educational items or educational services. It varies. It means if you are considering education, then the inflation rates for educational services 12%, while on an average the inflation rate is considered 6% per annum. So depending upon the goals you want to achieve, you will have to do your financial planning accordingly to beat that inflation, and accordingly you will have to invest. So you don't need financial planning for nuclear families and plethora of information. What are the various issues in financial planning? Goal setting, that is the investment for short-term, medium-term and long-term goals to achieve. You are focusing on wants, that is the needs and wants part. You want to manage income, expenses and savings. So that's why you do need financial planning. You want to review your assets and liabilities. You want to save money and to create an emergency fund for the uncertainties for the future. You can take adequate insurance for managing risk, and you can review your net worth. Your net worth means, your net worth is essentially a grand total of all your assets minus your liabilities. That is, you're deducting total liabilities from the total assets. So let us try to understand how to calculate the net worth, that is your present financial position. You can see the individual worth statement of Mr. Peter George as on 9th December 2018, where the liabilities part we can see in the left hand side, and the right hand side we are having the assets. Liabilities we are having housing loan, vehicle loan, credit card outstanding, and the assets parts we are having cash on hand, cash with bank, fixed deposits, recurring deposits, paid up in LIC, investment in shares, vehicles market value, house market value, jewelry. You sum up all the assets and sum up all the liabilities, then subtract or deduct the liabilities, total liabilities from the total assets, you will be able to get the net worth. Systematic investment plan, which is commonly referred to as a SIP, and allows you to invest regularly a fixed sum in your favorite mutual fund scheme. So SIP is a gateway to the mutual fund scheme. So you can invest in mutual funds through SIP, systematic investment plans. That is, you are investing in a small manner, and by which you can create wealth of your own. In SIP, a fixed amount is deducted from your savings account every month and directed towards the mutual fund you choose to invest in. So SIP provides the simplicity of a bank RD, that is a bank recurring deposits, and its versatility of multiple asset classes and the potentials for better returns. So SIP, which allows an investor to invest a fixed amount regularly in a mutual fund scheme. It lets you set aside a fixed sum of money at regular intervals. And what is that objective in mind? Is the objective to generate capital appreciation in a longer run. And SIP investments inculcates the habit of savings. You are not trying the market, you are investing in the SIP, but someone else is managing your investment. Who are they? The asset management company, and their fund managers are managing the investment parts. And as the investments are done over different market cycles, the investors benefits from the market volatility by getting to buy more units of the same fund when the markets are low and buying less units when the prices are high. These are the advantages. That is known as rupee cost averaging. Rupee cost averaging. So how to invest in SIP? Every mutual fund scheme has a specific goal and purpose. You need to choose one that suits your requirements. You make an informed decision based on your individual needs and choose a systematic investment plan mutual fund you want to invest in. All mutual fund investments mandate KYC documentation. So an investor can invest a predetermined fixed amount as low as 500 rupees in a scheme every month. Micro SIPs work on a financial inclusive model which aims to collect tiny sums from daily wage earners in semi-urban and rural pockets of the country. Reliance, State Bank of India, Unit Trust of India, Aditya Birla Sun Life, ICICI Prudential and Axis Mutual Fund were among those which used to offer micro SIP options. However, micro SIPs did not take off due to higher acquisition cost and logistic issues. So go for SIPs. So go for SIPs. So whenever you are investing in mutual funds, I want to suggest some of the methods or some of the strategies to be taken before going for mutual funds. So first, you see or you look at the track record or history of the mutual fund company at least for last 8 years. 8 years. If it is offering low risk and high return, then definitely you look at whether it is truly correct or not, and you can easily check at the valueresearch.com. You must see whether the scheme is registered by SEBI or not. You must see the fund consistency, how the fund is performing over the years. Try to avoid the newly introduced mutual fund in the market which is not having a record. Yeah, and also you must see the role of fund manager, whether he was being able to give you better returns in the recent past or not. And you must look into the asset under management, whether they are going to invest in the large cap funds or mid cap funds or the small cap funds. These are much important part. To be what are the good qualities of a successful investors? You must have the patience and must wait for a long time to reap good returns. You must do adequate research for decisions, must be well disciplined and systematic and regular, and must have the ability to keep cool when the value of investment is falling. Be open-minded for market developments and must have the ability to take quick decisions. And you must have in mind that is the key aspects of investing is maximizing returns, minimizing risk, and liquidity. These are the three key aspects of investing. So advantages of SIP: you can start small and increase as your income grows. You can reap benefits of starting early. It is a systematic and disciplined investment approach. You don't need time for the market because someone else is looking after the market. Harness the power of two powerful investment strategies: rupee cost averaging and power of compounding. Rupee cost averaging that lets you benefit from volatility, and power of compounding, that is the small investments create big kitty over time, and combine the benefits of tax saving with systematic investing. So what are the goals you can take in investing in SIPs? To accumulate emergency funds, accumulating down payment for home, pre-closing home loans, save for child's education and marriage, retirement planning, for long-term wealth creation, to accumulate capital for a startup, to upgrade vehicle, to plan for home improvement, and to go for dream vacations. Before that, I want to say, investing in SIP or mutual funds, the return you will get, that is the market linked. So there are two sides, positive as well as negative. National pension systems, a technology driven system to save small amounts today to build fund for your retirement. NPS. Nowadays, whenever you join a government job, everybody is not entitled to get the retirement benefits as well as pension. So be prepared of it about your retirement planning beforehand. So pension may be described as a regular payment which one aspires to receive regularly once the person retires from his regular occupation. So everyone is not entitled to get pension. So NPS is a way out by which you can get your pension. In NPS, it's a low cost product. You can get the tax breaks for individuals. It's a market playing returns. It is professionally managed by experienced pension funds managers, and it is regulated by Pension Fund Regulatory Development Authority, and it can be opened with a minimum contribution of 500 rupees. Who can join NPS? Citizen of India, a resident or non-resident, and the age must be between 18 to 65. It may be salaried or self-employed. Here the subscriber allotted a unique permanent account number, retirement account number, that is the PRAN. This unique account number will remain the same for the rest of the subscriber's life. In NPS, we are having two accounts, Tier 1 and Tier 2. In Tier 1 account, which is also known as pension account or a retirement account, NPS subscribers to invest and take out of money anytime. That is in Tier 2. But in Tier 1 is a retirement account which gets a host of tax breaks, but certain portion is allowed to be withdrawn from pension account subject to prescribed conditions. Here the fund transfer is not possible in Tier 1 account, but in Tier 2, funds can be transferred from Tier 2 to a Tier 1 account. In Tier 2, which is also known as investment account or a voluntary account, you can have that flexibility of withdrawing money and having the kinds of exit regulations. In Tier 2 account, you can invest in equities, in corporate bonds, in government securities, in alternative investments. Equity means high return, high risk option, where funds invest predominantly in equity-oriented schemes. Corporate bonds, where the medium return and medium risk option, and the fund invests predominantly in fixed income bearing securities other than government securities. And government securities, which is considered as low return, low risk option, where fund invests predominantly in pure low risk government fixed income securities. And you can invest in alternative investments part. You are having two kinds of option, active choice option as well as auto choice option. In active choice option, where you can choose the proportion of your funds where you can invest in each of the investments. Active choice. And auto choice, it's basically considered as a life cycle fund. That is, under this choice, the subscriber's contribution will be invested in the life cycle fund. So according to your age, the investment will go for. So before going for investment in NPS or any mutual funds, you must study a lot, give your time, do your planning, take strategies. After that, go for investments. So in summing up, A sound financial plan should comprise of assessment of income, control on expenditure, tax savings, investment based on financial goals, review of investments, SIP for long-term wealth creation, NPS for retirement, PT.
Thank you, sir, for this sound financial suggestions that you have given us. I would now like to call upon our IQAC coordinator, Dr. Monica Vishwash ma'am, to kindly give the vote of thanks if she is there online. Monica ma'am, are you there online?
Good evening. Yeah, can you hear me?
Yes, ma'am. Yes, ma'am.
Okay. Good evening, all. Good evening to our respected principal madam, Dr. Lorna Mukhopadhyay, to our honorable speaker, and all the students present. First, I want to thank Dr. Lorna Mukhopadhyay because she has always supported and encouraged wonderful seminars and webinars, especially like this one. Thank you, ma'am. And of course, not to mention our speaker, this webinar or the topic on financial planning is beneficial to all, not only teachers or those who are into service. I think the students also, because they are the future. So how they will plan their financial income and status in the future, I think this lecture was immensely important for them. Thank you, sir. And I thank the NSS coordinators, Dr. Tulima De and Shudipa Pramani, for organizing this session. I thank you, Jasmith, for being an excellent host. And of course, the technical support team, Dr. Tulima De and Shohadru Roy. Thank you.
Thanks a lot, ma'am. I would now like to call NSS coordinator, Professor Shudipa Pramanik ma'am, to kindly say a few words. Shudipati, are you there online?
নমস্কার, আমি বাংলাতেই বলছি কারণ আমি এই ল্যাঙ্গুয়েজটাতেই কমফোর্টেবল। তো প্রথমেই আজকে যারা এখানে উপস্থিত আছে, স্পেশালি স্টুডেন্টরা অনেকক্ষণ ছিল এবং কিছু স্টুডেন্ট জয়েন করতে পারছে না বলে আমাকে বারবার জানাচ্ছিল, সেটা হয়তো হলো না। যাই হোক, প্রথমে যাকে আমাকে ধন্যবাদ জানাতে হয় তিনি হচ্ছেন আমাদের প্রিন্সিপাল ম্যাডাম ডক্টর লর্না মুখোপাধ্যায়। বহুদিন ধরে এই প্রোগ্রামটা করার আমরা চেষ্টা করছিলাম, তো কোনো কারণে এটা হয়ে উঠছিল না। তো আজকে ম্যাডামের সাপোর্টে আমরা এই দিনে প্রোগ্রামটা করতে পারলাম। তারপরে হচ্ছে যিনি স্পিকার ছিলেন ডক্টর সুদীপ্ত ঘোষ স্যার, সেবি রিসোর্স পার্সন। উনি আগেও অফলাইন যখন প্রোগ্রাম হয়েছে তখনও উনি আমাদের অডিটোরিয়ামে এসে প্রোগ্রাম করেছেন, আজও অনলাইন প্রোগ্রাম করলেন। তো স্যার প্রতিবারই আমাদেরকে মানে অনেক বিষয় জানিয়েছেন কিভাবে আমাদের ফাইন্যান্সিয়াল প্ল্যানিংটা করা উচিত। স্টুডেন্টরা ইন ফিউচার জব করবে তখন তারা কিভাবে তাদের ফাইন্যান্সিয়াল প্ল্যানিংটা করবে সেটা, এবং আমরা কিভাবে সেভিংসগুলো করব সেটা সম্পর্কে তিনি আগেও জানিয়েছিলেন, আজও বললেন। আরেকটা কথা উনি বলেছিলেন যে একটু স্টুডেন্ট ক্রেডিট কার্ডটা একটু বলবেন বলেছিলেন, সেটা সম্ভবত সময়ের জন্য আর হয়ে উঠবে না। তো ঠিক আছে, নেক্সট পরে যখন আমরা আবার প্রোগ্রাম করবো তখন এই বিষয়টা নিয়ে আবার প্রোগ্রাম করব। আইকোয়া কোঅর্ডিনেটর মনিকা বিশ্বাস, তাকে আমাদের তরফ থেকে ধন্যবাদ জানাচ্ছি। তুলিমাদি পুরো প্রোগ্রামটা অ্যারেঞ্জ করেছেন, ডক্টর তুলিমা দে, এনএসএস প্রোগ্রাম অফিসার ইউনিট 2, তাকেও ধন্যবাদ জানাচ্ছি। এবং জাসমি যিনি পুরো প্রোগ্রামটা কোঅর্ডিনেট করেছেন তাকেও আমাদের তরফ থেকে ধন্যবাদ জানাচ্ছি। এবং টিচারদের মধ্যে যারা ছিলেন মৌমিতা বিশ্বাস, মৌমিতা দি, সুদীপ্তা তরফদার এবং সুভাষ চন্দ্র মণ্ডল স্যার, এদেরকেও আমার তরফ থেকে ধন্যবাদ জানাচ্ছি। যদিও মানে এই প্রোগ্রামটা হয়তো আরো সাকসেসফুল হতো যদি না পুজোটা থাকতো। আজকে অলমোস্ট পঞ্চমী, তো সবাই হয়তো পুজো নিয়ে ব্যস্ত, সেই জন্য হয়তো আরো স্টুডেন্টরা আসতে পারলো না। তো আমাদের তরফ থেকে, এনএসএস ইউনিটের তরফ থেকে, কলেজের তরফ থেকে সকলকেই শুভ শারদীয়া। সবাই ভালো থাকবেন। আমরা প্রোগ্রামটা আজকে এখানেই শেষ করছি।
Okay, ma'am. Thanks a lot, ma'am. Ma'am, principal, ma'am, can we end this session? ম্যাম বোধহয় বেরিয়ে গেছেন, আবার জয়েন করবেন। I suppose ma'am has left the meeting. Somehow she has got disconnected. So Tulima di and Monica di, can we end this session?
Yes.
Okay. Thank you. Thank you everyone for joining in. Thank you.
Thank you.